building wealth and legacies. Ooh, we, it's bigger than me. Ooh, we, building the kingdom. Ooh, we, now I'm free. Freedom ain't found in money, freedom is found in grace. That's why I keep my faith in God and not that money I make.
What's up, y'all? It's your boy B. Weddles, ready for Charts Reloaded from our mentor Curtis Branch. How I mastered Bitcoin. I'm finna go through a few charts with Fibonacci and a few smart money techniques. I'm gonna give you some techniques on how to see cryptocurrency. It's gonna be absolutely amazing. I hope you're excited. I'm ready to pull out these charts. We have a Bitcoin chart right in front of us, and we're gonna look at some examples. Let's push the rewind button and let's go all the way back to here. Let's see, where are we at? January 2020. And so let's go through some examples. First, I want to pull out, talk a little bit about what is cryptocurrency and things like that. But Bitcoin is one of the most major, it's a replacement to money. It's a peer-to-peer transactions of how people can what they do is send money back and forth to each other and without actually using the banks. And so Bitcoin has been huge because you know what they've done? They replaced the banks. And so a peer-to-peer transaction, are you serious? And so Bitcoin is absolutely phenomenal, but the way that it moves, the way that it can trade, it can be a long-term investment and also short-term investment. You can swing trade it, you can day trade it through the futures market, and there's so many opportunities with the Bitcoin and cryptocurrency market, and I just want to go over a few principles that should blow your mind. And what I'm going to do is just use the Fibonacci tool. Now, how do you find the Fibonacci tool? And what you do is after you open up your TradingView account, and if you don't have TradingView, just type in tradingview.com. It's free. Put in your email and sign up. It's one of the most simplistic charts for beginners, and it has tools on the left side. And right where you see that pitchfork, you will find the fib retracement tool. Now, that's what we're going to be using today, the fib retracement tool. And what I'm going to do is I'm not going to have all the fibs. I'm just going to cover a few of the fibs that in this particular lesson. I'm going to use just a few fibs, and what we're going to do is just go over the power of structure in the market. We're going to use the power of structure in the market, and we're going to see how cryptocurrencies actually obey the structure. One thing about Fibonacci actually is one of the most powerful tools. You can see it in your fingers, you can see it in leaves, you can see it in a seashell, you can see it in the galaxies. It's a Fibonacci, it's a sequence. You can YouTube it, Google it. You can understand that there's a sequence that's set in nature, and this same sequence that's set in nature is calculated within human emotion. And a lot of people try to figure out, why does Fibonacci work on the charts? Because at the core of transactions, at the core of trading is human emotions. At the core of trading is human decisions. And those human decisions and human emotions, they leave an imprint in the market that can be measured. And you can see this measurement whether if you're looking at the symbol of music, like the sound of music waves. If you're looking at heartbeat waves, you can see Fibonacci and harmonic patterns within heartbeat waves. This stuff is ingrained into our life. And so what we actually see is the markets actually like extracting these principles, extracting this core of the fibs, that the market it obeys it respects it. It's something about the human emotions and how the waves and the momentum and all the energy in the market, it plays along with the Fibonacci levels. And so what I wanted you to do is take a snapshot of this particular setting, and what we do have is the 50%, the 618, the 786, the 886, and we got our 0 and our 100% line. And what we want to do is this golden zone, the yellow lines that you see on the chart. This is when you usually see an impulse move. Now let's go to a quick lesson. I'm gonna go on a quick lesson, and we're gonna go through, because I really want you to see how you can master these markets with this concept. 2, 3, 4, and sometimes we're gonna put a fail 5. So here we have what we call was harmonic pattern. I mean, we have a Elliott wave, a 5-way Elliott wave. Elliott wave. Let's make it capital. Elliott wave, right? We have an Elliott wave pattern, and so what does this have to do? Now, normally in an Elliott wave pattern, from our 0 to 1, you don't know what price is going to do. But from 1 to 2, typically what you do is you get a retracement to a 618, or you get a deeper retracement into this red zone. Now, the core of the Elliott wave, and I'm not trying to get ahead of myself here, but the core of a wave is this pattern. The core of every wave, so you can break down the complexity is an Elliott wave and take all that complexity away and break it down to the core of what it is. And so now what we have in red is an A to B, a B to C, and a C to D. And what this is in the market, it actually measures the impulse. The impulse move is the initial reaction, the initial buying, and then the retracement is the taking profits and the people being shook up out of their positions, and the retracement is a part of the contraction phase of after a strong impulse move to the upside. What you would see is the energy will start to die off, just like when you go to sleep at night and you have a strong impulse in the morning, but then eventually your energy begins to die off. And so you can see that pattern right there in the A to B, the C pattern, and then from C to D you have your second extension. And so at the core of every wave is a A to B, a C to D pattern. So within this A to B, C to D pattern, what we doing is you take this fib, and once we get an impulse move to the upside, right? Because we don't know that's going to happen. But once it happens, it sets us up for where we should look at for the next buying opportunity. Is there actually going to be structure in this market? And this Fibonacci, what it does is it measures the energy of the market, whether buyers is going to set back in for another impulse move to the upside. Now, the A to B to C, B to C pattern is the energy dying off. And what you will see is the buyer to come back in at a discounted level and push the price back up at an equal measure, which means from 618 to 1618. And so price will move in an equal measure, in which you will see that A to B be repeated in a C to D extension. And so, but the key is we want to pull out our fibs and get ready for the next move. And we want to use the golden zone, and we want to use the 786 and the 886 for our extreme zones. And what that do is let us know that this is the most extreme price level, the most discounted price level, that this price, when it pulls back down to this level, if it holds, then we should have major buyers and institutions endorsing this price. And so that's the core of the fib, and why we use the fib, because every structure has the A to B, a B to C, and a C to D pattern. Now let's take this off our charts and go to some Bitcoin, because I don't want to make this video too long. And so let's use our fib, and here we go, our first impulse. So this is the impulse that I'm talking about. You didn't know that was going to happen. When you look at structure, you don't know if this thing going to keep on falling. But once you get some respect there, you say, okay, now why didn't you could have put it here, but you didn't get anything. You didn't get any information. You didn't get any no retracement or anything. It paused, but then it consolidated right there. So you're like, okay, now you get a move to the downside. And once you get that move to the downside, one of the rules is, as you've seen in the first video, with Curtis is how do you know when to pull that fib out? Well, you can go 0.25 or whatever you want to do. I use 0.25 sometimes. So once you get that 0.25 and price breaks that, once you see the price break that 25%, then you like, okay, game on. You know what I'm saying? Once price break that 25%, then you can say, okay, now my fibs is active. You pull that fib out from that first impulse move and you mark that golden zone up. This is a golden zone because the whole Fibonacci teaching is based off the 618, but the 50% is actually not a Fibonacci number. It's the equalizer. It's the balance of the market. So it's 50% of that impulse move is where you will see a lot of you will see a balance in the market, whether you'll see a consolidation or you'll see big buyers come in. And so that's something to take in consideration. But once you get that impulse move and price breaks below your 25%, then what you can do is draw your golden zone and be ready for the next move. So here we have the impulse move. It comes down and comes into our golden zone, right into the 618, just a little bit past a 618, and it moves to the upside, right? So that's our first move. So this is our A to B, B to C, right? And this once this completed, it's a C to D from this area. We can pull it out and make it all make sense. Now we got our A to B and B to C from this area. But I'm gonna show you something. This how powerful the fibs work. I'm gonna delete this and let you know from that one impulse move, we got another impulse move to the downside. Now, if you could have easily been like, well, the order flows is to the downside, so I'm gonna get ready to short because I don't know if it's gonna make a lower low or not. Easily, you can be in that mindset because, as you see, price is in a downtrend completely. And because price is in a downtrend completely, you can be ready to take that short into that zone. As you see, price comes down, impulse moves, you draw your fib out. You draw your fib here. Hold on, guys. Let me flip this around. Hold on, let's do this over. From here. So we have our impulse move to the downside. So price comes down, pushes back up to our zone. And here we have it respecting the 618 and the 50%. It breaks the 25 here. That's what I was looking for. I was looking for the 25 to be broken. Because once the 25 is broken, then the fib is active. So boom, now we got a 618 push back down to the downside. And then what we did is we had a bigger pattern take place, which we seen price respect this golden zone. Now, let's go into it again. Now what we do is we got another impulse, which completed this is our C to D from here to here. But what we can do is, once price comes down, breaks our 2.5, this fib becomes active right then and there. Once that fib becomes active, we already boxed it up, ready for price to come down. And as you see, it touches the 50% in the 618 and moves again to the impulse to the upside. Now let's do one more example. I'm going to push the play button. We'll push the play button and see what we can get out of this. So boom, we got a big strong move to the downside. This is our retracement. It breaks our 25, so this fib is active. And once that fib is active, we are in the game here. Now we don't want to just jump in. We want to wait to see what price do and how it respects this area. Now we see we get a little sloppiness within this area. Price hasn't made up his mind. It pushes down. Still no strong move. Now this comes deeper into the 618. Now what you want to do is be ready, because that 618 can easily break. That doesn't mean the trade is over, But what it does is put us on alert mode, whether we should be looking long or looking short. Now, how do we get ready for that? Well, this is where we can play devil's advocate. We take this. We have where would the sellers be at? That's the question. Where would the sellers be at? Well, we don't know if this is actual low yet. We don't know if that's the actual low yet. If it is the low, we know sellers might show up in this area. But if it's not the low, then we know we can go ahead and get ready to take this buy once we see strength come into this market and see what happens. So we get a little buy. It didn't break the 25, so we still in the impulse to the downside. Now we get some strength to the downside. To the upside here. We can go ahead and take this trade. We can take this trade here and just take it to the upside and see how it plays with that zone. Then we can take some prop. Okay, now we take partials off because we know this golden zone is where sellers might be, and so we want to take our portion, take our money. You know what I'm saying? Get ready to pay ourselves. Then we got a strong move to the upside. Now it's hitting the 786. We break even. Now we know that if we're going to see any sellers show up, they got to show up here. They got to show up. This is the last line of defense. This is the last line where sellers show up, where supply is in the market. This is the extreme place where if I'm a major bank or institution, I'm going to be sitting here waiting at this extreme level at a 78, 86, 86. You know what them numbers mean? I'm paying that 88. That's only 12%. I'm getting a discount, an 88% discount. I'm getting a 78% discount on where price could pay if I'm looking for a price to go to the downside. So that's a whole nother perspective when it comes to Fibonacci. That these numbers could easily be looked at as a percentage gain. These numbers could easily be looked at as, okay, if it's coming to a 7886 and that zone is the actual top, then I'm there and I'm waiting on price to get to that zone. I'm looking at a discount. I'm looking at a 88% discount, a 78% discount, a 61.8% discount on the price. Now I gotta finish this video because it's getting long. Now we get a strong impulse move to the upside. Now we see it. Now they set the tone for the next move. But we already broke even. We are in this trade. We have nothing to lose. We set our our trailing stops, and we're going to see where price go from here. And we're in this thing. We're in this thing. We're in this thing. And see how price is weakening in his zone. It's weakening in his zone, but it's still going to the upside. And I'm gonna stop here because that's pretty much how you navigate and this video is a little longer than I wanted it to be, but that's how I mastered the Bitcoin market. Was just mastering a couple tools of the Fibonacci, a couple zones of the Fibonacci, and breaking it down and creating a template. And then putting the psychological understanding behind it, you know what I'm saying? Not just using the fibs blindly, but understanding that this is a market. So that's why I said these are discounted areas. You know, it barely broke the 25. It barely broke the 25. And so it came down to probably the 38.2. I don't have it on there, but it came down probably to the 38.2, showing more strength. And that's one thing that the fibs do also. The fibs measure momentum in the market. They not just showing you structure, but it show you momentum. When you get a shallow retracement, or you know what I'm saying, then you know that there's strong momentum. When you get a retracement to the 50 and 61%, you got healthy momentum. When you get a 78, 88% retracement, then you know, okay, these dudes, the buyers are starting to weaken up. The sellers are starting to weaken up. And then you can start framing your work and say, okay, if the sellers is weakening, but I see buyers coming in, where will the sellers show up next? And then you can pull your fibs out and kind of gauge where is the discounted prices. Think like a somebody who's buying wholesale and selling retail. We got to think like that because we want discount prices. We want our prices to be we want to trade with the banks, but we got to understand where do they want to get in at. And so that's the power behind the fibs and how you can use that in the crypto market. Now we can go on more examples. I pray that you like it and subscribe to this channel. And if you want more, just put something in the comments. That way we can build upon this structure and then take it deeper. And we can, you know, far as you want to take it, just comment below and let me know what you think. All right, God bless y'all. I see y'all on the other side.